Good morning, everyone. So, after a couple of easy standards, Ind AS on fair value measurement and employee benefit, on operating segments, today we are back to discuss another third module standard, that is Ind AS 19, employee benefits. It's a very important standard from your examination perspective. Reason being, there are a lot of additional problems which have been introduced over the past couple of years. And the coverage of this standard, the variety that it offers, probably makes it a very attractive case for the examiners to put it in the examination. We have seen it come a couple of times in the examination as well. And whatever questions have come in the examination, they are fairly simple. So it is scoring also on that front. So from that perspective, a very important standard. So good to see you, Shankar, Viraj, Shailesh, Mansha, Shruti, Yedu. Good morning, everyone. I think the usual ones are there. Yes, I not able to see Tanisha, Vanshika. I think they are also part of this batch. Okay, and then we had Viraj is there, Shailesh is there. Yes. Okay. So, anyways, let us begin our session. Yes. So, Ind AS 19 employee benefits. So we had a corresponding standard under the accounting standard regime that was called AS 15 that dealt with accounting for employee benefits. So why is this employee benefit requiring a different standard? Why do I need to have a separate standard to discuss how to account for salaries? Because obviously the first thought that comes to us is, sir, employee benefits means salaries. So salary is a regular accounting. Every month the salary accrues and then we pass the entry salary account debit to salary payable and then we pay off that salary and then it's done. So why do I need a salary separate standard only for this journal entry? The answer is employee benefits are not related to salaries alone. There are a multitude of employee benefits. Sir, what are the other benefits, what you're talking about, which is not there under, which is over and above salary? And you can give me some examples and I will give you some examples. The first benefit that I can see is a provident fund contribution. Is it an employee benefit? Yes, definitely it is an employee benefit. I have ESI. Is it an employee benefit? Definitely it is. But is it salary? Answer is no. What other examples do you have? Well, an employee retires and takes his monthly pension. So pension becomes an employee benefit. An employee retires and he has a lot of leave encashment standing to his credit, a lot of leave balance standing to his credit. So he will encash those leaves. So you have leave encashment after retirement. So you have leave encashment. Okay. An employee is working and for some exigency, he needs some amount of money. He notices that he has leaves to his credit. So during service also, he encashes his leaves. So that also will become part of your employee benefit. What other examples can you give me of employee benefits? Yes, what other examples? Come on, give me some answers. Okay. In these times of high attrition, it is good to see some people who are still loyal to their organization and continue for years and years. So you could be having something known as a retention bonus. Okay. And those who have completed 5 years, 10 years, 15 years, 20 years, 25 years in the same organization, they could be given something known as a long-term service award. They could be given something known as a long-term service award. Next, an employee is retiring from service voluntarily because probably due to certain domestic reasons or whatever the case may be. So therefore, you are having voluntary retirement service. or the government comes out with a scheme for its employees to give the voluntary retirement service scheme. Next, an employee retires. Very good. I see some people answering. Gratuity. Yes, you are having gratuity that will come into play. Apart from VRS and gratuity, what other forms are there? Yes, what other things are you aware of? Some innovative products, some innovative payments. To just give you an example, you would be having something known as stock options. You would be having something known as stock options. Yes. So employee stock options is one thing which is a manner of payment. And finally, uh, it never ends here. The buck does not stop here. There will be more and more employee benefits that can come, whatever the name may be, whatever the name may be. Okay. So now you are able to understand this. Okay. Google had something known as a death benefit, had something known as a death benefit. Okay. So death benefit means what? An employee dies while in service due to whatever reasons. Okay. So if the employee dies while he was in service with Google, his family would get the same salary for the next for the next 10 years. And that is known as death benefit. Now Google has stopped it, but yes, this is still there. So death benefit is one more example of an employee benefit. So basically, the standard deals with how do I recognize the service of all these? How do I recognize the expenses of all these form of employee benefits in the financial statements? And that is what Ind AS 19 is all about. Okay. So that takes care of what are all possible coverages which you are going to see. In all these employee benefits, we will be categorizing into 4 broad segments. And we will look at the accounting under each of those segments. And then segments done, disclosures done, we are done with the standard. We have a 3-day session for this. Yes, I think by tomorrow we should be completing the better part of the standard. So on the Tuesday's class, whatever remaining questions will be there, we will be able to solve it. Most of the questions I'll be solving while doing it today. Okay. So now, what am I going to cover? Sorry, I opened the wrong slide. Okay, 1 second. Yes. All right. So what is our agenda for discussions, or what is the topics which are going to be covered? First of all, introduction, followed by the scope, followed by what are short-term employee benefits. Then what do you mean by post-employment benefits? It could be multi-employer plans, group administration plans, risk-sharing plans, state plans, insured benefits. Then we have accounting for defined contribution plan, defined benefit plans, accounting for defined benefit plans, other long-term employment benefits, termination benefits, and then we look at 2 small appendices to the standard, Appendix A and Appendix B, and that concludes the standard. The ones which are highlighted in red, the topics highlighted in red are extremely important from examination perspective. The ones which are not highlighted in red, particularly these items, are more of a theoretical nature, whereas other long-term benefits and termination benefits are seen from a very, a very simple perspective. They won't have much complications. So this is what we are going to cover under Ind AS 19. Okay. This presentation is already shared with you. You can download it from the Board of Studies portal. Okay. So why this Ind AS 19 had to be introduced? Why this Ind AS 19 had to be introduced? Let me ask you a simple question and then you will be able to give me the answer to that. Okay. Let me ask you a simple question. You are an employee. You have joined an entity on, let us say, 1st November 2023. You have worked for the entire month of November. So 1st November to 30th November 2023, you have provided your services. Now, after providing your services, the salary is not paid to you because it will be paid, say, on the 4th of December. It will be paid on the 4th of December as per the timeline. Now, the question is, how do I pass the entry for salary here? How do I pass the entry for salary here? Should I recognize the expense for salary in November when it accrues, or should I account for the salary on 4th of December when it is paid? What do you say? When are you going to recognize the salary entry? When are you going to recognize the salary entry? Should I recognize it on 30th November as payable? Should I recognize it on 4th December when it is actually paid? Or, sir, do whatever you want, it doesn't really matter. That is what you guys are saying. It should be accounted for in November itself. Absolutely right. So on 30th November, you will be seeing the entry salary account debit to salary payable. Okay. So this would be the entry that is being passed. Okay. So now let us build up on this example. Let us now build up on this example. Why suppose? You guys will qualify in this examination. Okay. This is the May batch, right? So May batch, you will qualify. May batch, you will qualify. And when you qualify in the May attempt, the results will come somewhere in June. And July, you are going to join. Let me take safe side. After all, campus selection, everything is done. On 1st July 2024, you are going to join. Whether it could be a big four, or whether it could be the corporate, or whether it could be whatever choice. Okay. So if you join a big four, I think that some of you will rise to become one of the partners of big four. Why not? Why to think small? Let us think big. So you will continue with that big four firm for close to, let us presume, 30 years of your career. Or if you join a corporate industry, then you will be in that industry for 30 to 35 years. You will be with that organization, let us presume. And you will ultimately end your service at the end of 30, 35 years. So therefore, somewhere in 2060, let us presume, 30th June 2060, many of you would be married, you would have children, you would have their marriage coming up. All this would be done. And over this 35 years of life, on 30th June 2060, which is 36 years from the date when you qualify, you will say that it's time to hang my boots and it's time to retire. So you are retiring from your service. And on 30th June, when you retire as a partner or a CEO or a CFO, when you retire, you are going to get value for the services that you have rendered over 36 years. And over that 36-year period, the first thing that you are going to get is gratuity. The first thing that you are going to get is gratuity. My question to you is, and think and answer. Don't look at the presentation, study material, nothing. Think and answer. When should gratuity be recorded? You have provided service to the MNC firm or the corporate sector, whatever, wherever you work. You have provided your service for 36 years. So now the gratuity has accrued to you. When am I going to recognize the 36 years worth of gratuity? How do I recognize gratuity? Basically, it will be 15 days salary. So your last drawn salary into 15 by 26 into number of years served. So that will be 36 years. Okay. So now you are going to get the salary based on this formula, based on this computation. So now my question to you is, this is your retirement date. When are you going to recognize the expense for gratuity? Gratuity is a payout for the company. Let us suppose you guys are working for KPMG, and KPMG you give distinguished service for 36 years. You retire as a partner, a senior partner, India head, and after that retirement, 30th June 2060, KPMG comes and hands over the gratuity check to you. When should KPMG recognize the gratuity expense? 30th June 2060, you retired. 1st July 2060, KPMG pays the gratuity to you. Tell me, when am I going to recognize the gratuity expense in the books of KPMG? Yes. When am I going to recognize gratuity? You don't have to worry about a wrong or a right answer. I want you to give me the wrong answer also, but I'll be definitely very happy if I see the right answer as well. Wrong answer will mean that I have an opportunity to explain. Right answer will mean that you guys are already aware of what is the intent behind asking this. So tell me, come on, quickly, when am I going to recognize this? Yes. So I'm having the right answers which I expected. And that is why I always ask this question when I do Ind AS 19. See, majority of the students have said the gratuity will be recognized on the day it is paid. That means on 1st July 2016, you will have gratuity expense account debit to bank. So in your what you can say, in your understanding, KPMG or whatever company you're working will pass this entry, gratuity expense account debit to bank. Okay, let me make things simple. I'm not complicating it. Let us assume your monthly salary, considering inflation, etc., at that point of time is 20 lakhs. Okay, I'm keeping things simple. 20 lakhs per month. 15 days salary के बदले में I'll just take half. 15 days salary के बदले I'll take half a month salary. So 20 lakhs into half into 36. So this will be 10 lakhs into 36. So 36 into 10 lakhs into 10 lakhs. Is that right? So that gives you 1, 2, 3, 4, 5, 6. 3.6 crores. So you will be getting 3.6 crores. Okay. Now, please pay attention. This entry will be passed, as most of you said, at the time the gratuity is paid. At the time when the gratuity is paid. I have a problem with this understanding. I have a problem. You have served 36 years to this company. You have given 36 precious years to this company. You gave your blood and sweat for 36 years. And when you give your effort, when am I giving the effort? Sir, I'm giving the effort in these 36 years. I'm giving the effort in this 36-year period. And if I'm giving this effort in the 36-year period, the company is getting the benefit also in this 36-year period. Sir, मेरे सर्विस देने से कंपनी को क्या बेनिफिट होगा? होगा ना, that is why it is retaining you for 36 years. So therefore it is going to get benefit either in the form of increased business from you, or from the fact that you are doing your job, which is ensuring the cash flows continue to enter the company. So therefore, from 1st July 24 to 30th June 60, each and every day of service that you provide is giving a benefit to the company. On 1st July 2060, have you provided any service to the company? To all those who said that we will book the gratuity at the time of payment, this question is for you. On 1st July 2060, what is the service that I have provided to my organization? The answer is, sir, I have not provided anything on 1st July. Because on 1st July, मैं तो घर में बैठा था. I am a retired person now, enjoying my days of retirement. And if that be the case, if that be the case, then why should the company book the gratuity expense on 1st July? Just imagine, कुछ भी काम नहीं किया 1st July को. You have not worked even a single minute on 1st July, and still the company is booking the expense of 3.6 crores on 1st July. Isn't that a mistake in our understanding? Yes or no? Isn't that a mistake in the way in which we have understood how gratuity works? Yes. Gratuity has to be paid when you leave on completing 5 continued years of service. You chose not to leave. That means the meter of gratuity is accruing throughout the service period. The gratuity meter is accruing throughout the 36-year period. It is just that the payout is happening when you retire, or the payout happens when you resign. Merely because the payout happens when you resign does not mean that it is accruing on that day. No, it has accrued because you have provided the service. That is why the payout is happening now. And therefore, some of you rightly said, you have to recognize the gratuity as and when you are performing the service. Now, the moment we start thinking this way, 36 years, sir, अपने को कल के बारे में मालूम नहीं है. I don't know what will happen tomorrow. I don't know whether I will live in this organization for 5 years, whether I will resign and shift to another organization, whether I will resign and start my own practice, whether I will go for higher studies and then after the higher studies I will go for a job later on. Sir, nothing is very clear to us. And if nothing is clear, sir, you gave a very simple example that 36 years you work in the same company. But sir, there is no certainty to that. If this is what you guys are thinking, if this is the reason why you hesitated to give this answer, let me tell you, your hesitation is absolutely correct. The whole the whole confusion arises from the fact that how can I estimate that I will retire on 30th June 2060? Tomorrow, when you join on 1st July 2024, after getting your results, do you think the company is in a position to estimate you will remain with it till 30th June 2060? नहीं होगा उसके पास guarantee. You are an employee of free will. You have not joined out of as a bonded labor. You are free to join and resign at any point of time. That is the problem with human resource accounting. And human resources have this brilliant capacity of a self-decision taking ability or a will of their own. And that is what makes human resource accounting absolutely difficult. Okay. Plant and machinery, no difficulty because उनके पास अपना कोई बुद्धि नहीं है. It is how we are directing them to use the plant and machinery will run. buildings, equipment, intangible assets, patents, everything will run the way the organization wants it to. But employees के केस में employees will not necessarily remain for the tenure that the organization estimates, because an organization works out of awareness, because a person in an organization works out of free will. He or she cannot be bonded to an organization for a lifetime, and that is what makes the accounting for the retirement benefits very challenging. It makes it very challenging because there are a lot of uncertainties associated. What are my uncertainties? Sir, first of all, I am myself not sure whether I will live for 36 years. आप 36 years का बात कर रहे हो, but who knows what will happen in 36 years? Mortality becomes one factor, right? Mortality becomes one factor. Next, I do not know to what level I am going to rise. सर आपने तो 30th June 2060 का पिक्चर दिखा दिया. You gave us the idea of 30th June 2060 on 30th June 2060 itself. But today when I am joining, how will the company know? First of all, it doesn't know whether I will be there till 30th June. Secondly, it doesn't know whether I am going to, what is the salary I will earn in 30th June 2060, it doesn't know. What will be my designation on 30th June, whether I will be a director or whether I will be a senior partner, whether I will be a partner, managing partner, managing director, CEO, what am I going to be? I don't know. So there is an uncertainty about your designation. There is an uncertainty about the payout. There is an uncertainty about mortality. There is an uncertainty of whether you will continue in the organization. This is what makes human resource accounting difficult as well as interesting. It is what makes human resource accounting difficult yet interesting. Because here we are going to see how am I going to do the accounting for gratuity in the time when the employee is performing the service. Ideally, what is gratuity? It is basically a payment that is set aside. You are basically, as an employee, eroding yourself. You are depreciating yourself by working for an organization. Let me be very frank with you. Okay. When you are working for an organization starts to take out your energy, your, what you can say, your age, your physical strength, everything starts to erode over the couple of years which you work in any organization. You are giving your efforts, and by giving your efforts, your hair will become gray, your movements start to slow down. As you grow more senior, your body starts getting depreciated. Okay. So therefore, these are the years when you are giving something of yourself to the organization. So rightly, the organization must book these expenses when you are providing. There are challenges. Those apart, gratuity, leave encashment, pension, all these items should be recorded right from the time you join on an estimated basis. But sir, I don't know how much will be the gratuity at the end. तो किसने कहा? Who told you to know? Nobody knows. I also don't know. जो काम कर रहा है उसको नहीं पता. The employee doesn't know. The company will not know. The company's MD also will not know. Only one person will know, and that person is not among all of us. That person is sitting somewhere in the sky, and he's going to decide what will be your salary on 30th June 2060. We don't have that ability to foresee so much of our future. It would have been nice if we had that ability. So therefore, we have these challenges which Ind AS 19 tells us how to do the accounting of it. So basically, the objective of this standard is that the employee provides services to the organization, and by virtue of the services, the employer gets some benefits in the form of revenue or profits. If you are a partner, you bring business by virtue of your time spent in the organization. You are bringing business means employers' top line is increasing, sales is increasing, professional receipts are increasing. And because the professional receipts are increasing, against those benefits which you are giving to the company should match the benefits to that. The company should match the benefits to that. Yes. So the one who provides benefits is the company. These benefits that are there should match the service which is going to come, should match the service which is going to be rendered. And therefore, the objective of Ind AS 19 is very simple, my friends. That is, apply the matching principle, match the costs to the benefits. Yes, it's a very, very simple concept that Ind AS 19 emphasizes. So now onwards, whenever you see any employee benefit in this chapter academically, and when you are going for your articleship, when you see your articleship, that time also, any employee benefit, your first question is, when am I accruing this? When am I accruing this? When is the employee providing the service? And related to that service, am I recognizing the service cost in totality? Am I providing the service cost in totality? Yes. So the principle is entity should recognize liability for employee benefits to be paid in the future in respect of services provided by the employee. When you are providing service, it's not just salary that you are going to get. A part of that payout is retained and given to you when you retire or resign in the form of gratuity or even in the form of monthly pension. And therefore, the liability for that should be recognized. As benefit from the service provided by the employee is consumed, benefit from the service provided by the employee is consumed, entity should recognize the related employee benefit expense. That is what this standard talks about. Okay. Now, let me give you another case of pension. Let me give you another case of pension. Yes. Take government organizations. Very interesting case. Okay. Our grandfathers, forefathers, everybody were working in the government organization. Last I remember, if you did not have lands, but you had a government job, it was a very good criteria to give the daughter to that person in marriage. Because the criteria at that point of time was what? The criteria at that point of time was having a stable government job. And what governments used to do? See, the basic thing was in that you should go back to the times of 1950s or 1960s when agriculture was what defined India. People were not wanting to come and do the job. Each one of them had huge parcels of land where they would do their agriculture, feed themselves, give a little bit as sale proceeds, and they would run their family. Now, to bring these people to the jobs like railways, banks, etc., they started coming out with pension. If you retire, if you work with the government for so many years, you will get a pension of so much. Now, the pension would come out every month. 1st July, 1st August, 1st September, so on and so forth. सर ये कब तक चल रहा है? As long as you are alive. जब तक आप जिंदा हो, you are going to get the pension. Sir, even if you die, Your family will get 50% of the pension. उसको बोलते हैं family pension. First, you are going to get pension. Then, when you die, your family gets pension. So you will have to go every November to the government and see and say that, look, I am alive. This is my identity card. Please process my pension for the remaining 12 months, for the next coming 12 months. And again, in the month of November, you will again go and give your presence of being alive to the government. So that is how this was working. Now, my question to you is, suppose the pension that would come to you on 1st July is 95,000 rupees and the monthly pension is 95,000 rupees. My question to you is, and be careful about this, right? Again, I'm asking, 95,000 rupees per month payout. What is the entry that will be passed at that point of time? Will you pass this entry? Pension expense account debit to bank 95,000, or will I pass the entry pension liability account debit to bank each month 95,000? What entry are you going to pass? Am I going to pass pension expense account each month after I retire? Or am I going to pass pension liability account debit to bank? Sir, liability should be created at some point of time now. If you are debiting liability, it means there must be a source, a credit line somewhere in the balance sheet as a liability. Yes? So this liability should accrue over the service tenure. Now, when are you going to pass the entry? You are going to pass the entry, not when. What entry are you going to pass? You cannot pass this entry. You cannot pass this entry each month because employee is not rendering the service after retirement. Employee rendered the service when he was working. A part of that payment, बाजू रख के, it was set aside, and the payout is now happening after you retire. And therefore, the entry will be pension liability account debit to bank, with the liability getting created, getting accrued over the service tenure. But sir, हमको क्या पता? What do I know? How many years my grandfather is there, or how many years this senior citizen is going to live? You don't know. You have to estimate. Sir, estimate is wrong. हाँ, तो that is why we call it as an estimate. वो गलत है, इसके लिए तो उसको estimate बोलते हैं. If it were to be accurate, if everybody of us meet the guy sitting in the sky, then we would not have any problem. I would know how many years I'm going to live, what I'm going to do. Then there would be no estimate. Everything would be a certainty. But this is not a certainty. This is an estimate. So the whole chapter is going to deal with estimates at each and every leg of the transaction. Are we clear with this? Yes. Have you understood the objective of Ind AS 19? Yes. So, what would happen without Ind AS 19? Well, see, ideally, monthly payouts, everybody gave the right answer. 30th November, you had to pass. But most of you gave a different answer in the case of gratuity, leave encashment, resignation, superannuation, etc. Nothing wrong in that. Okay, see, you making a mistake is absolutely fine. It's better to make a mistake here than in the exam hall is what I believe. Okay. But you probably understood that the certainty is what drove you to give that answer, is what I understand. You are certain about gratuity only when the employee resigns. Until then, I do not know. So therefore, it was that uncertainty that probably said, no, wait. Employee entry matlab, amount should be there. Amount means certainty. Certainty means when the payout actually happens. But no, if we do that accounting, there is a tendency to account for such expenses on payment basis without approval of liability over period of service, which you did, which once upon a time I also gave the same answer to my teacher when they taught me. Yes, and therefore that would be the problem, and which would result in matching principle getting violated, which in turn would mean that the conceptual framework, which I taught you long, long ago, that also would get violated. And therefore, Ind AS 19 gains significance because it ensures that you are complying with the framework. You are complying with the framework. Okay. All right. Fine. So now let us proceed with two small questions. These are not there in the study module. It is just to kind of test your understanding. Saral Limited, a company to which Ind AS applies, accounts for leave encashment when the same is paid to its employees. Comment on the accounting treatment followed by the company. That means you have to tell whether it is correct or whether it is incorrect. Leave encashment. It is accounted when it is paid. Is it correct or is it wrong? How to account, how to do all those questions we will understand shortly. But you tell me right now, is this correct to account on a payment basis? It is incorrect. That's right. Yadu, that's right. Yes. Muhammad, what do you think? I saw a new guy, Tariq. Yes. Tariq Ahmed. Yes. Is it correct or is it incorrect? Yes, it is incorrect. Yes, it's not correct, Kusma. It's not correct. You will not pass at the time when it is paid. You will pass the entry when it accrues. Okay, incorrect. Incorrect. Book expenses when liability accrues. When liability accrues over period of service. Over period of service. Okay. So that is right. Yes. Suresh, Manoj, all of you are right. Yes. Mansha, that's right. Okay. Now, an extract from the accounting policies of Ranganath Limited, a government company, is given below. Look at this question. This is a nice one. Retrospective wage revision pursuant to the 7th pay commission coming in force resulted in an increase in the pension liability by 240 crores. This always happens. Okay. 7th pay commission, 8th pay commission, 9th pay commission, 6th pay commission, all these commissions have only one job: to revise the pension that is paid out to the retired employees. Okay. Such increased liability is being provided in the accounts in a deferred manner over 6 installments commencing from the year 2019-20. As the auditor comment on the accounting policy followed. So what has happened is this. Understand carefully. They had a particular liability which was accounted. Okay. Uske baad you have a wage revision. Because of that wage revision, the pension liability increased. The pension liability increased. Now, by virtue of that pension liability increasing, the amount was taken to be 240 crores. When should the entity pass this 240 crores entry? Should it be passed entirely in the year in which the seventh pay commission came in force? Should it have been done at the time of service, or should it have been done in a deferred manner, how it is being provided? Yes, tell me now. Tell me. I hope you understood the question. Yes. What do you think? Should it have been done at the time of service being rendered by the employee? Number one. Should it have been recorded entirely when the seventh pay commission came into force? Number two. Or third one, should I defer it over 6 installments on an annual basis as given in the question? What is right? Okay, just 1 second, please. Just a minute. So, tell me, how much should it come to? How? Okay, so I have an answer that it should be done in a deferred manner. Okay, but disclose it. So people are saying do it in a deferred manner, but disclose it. Why are you saying deferred? Looking at the figure of 240 crores, are you saying deferred? Or is there any basis for deferring it over 6 months? Tell me, is there any reason? Yes. It shall be recorded when the seventh commission is in force. Absolutely right. Is this a mistake you have made? No. You did not know that the you did not know that the pay commission would you did not know that the pay commission would increase the salary. You did not know that when it would come in force. You estimated the pension liability based on the slabs which were in force and you accounted the liability. Now there is a revision to that. So this is a change in estimate. This change in estimate is increasing your liability. This is not an error. This is not a prior period item. This is not giving you any basis for doing the accounting on a deferred basis because the liability has arisen right when the seventh pay commission has come into force. It is like a court order. You have to pay 240 crores means you have to pay 240 crores. That's it. So you are going to book the liability immediately right now without deferring. Nothing else. Nothing else. Okay. So therefore the accounting policy is incorrect. The liability has increased immediately when the seventh pay commission came in force. It is not an error. It is not a prior period item. It is a current period item which is arising due to the change in estimate and therefore entire 240 crores will be recognized in the year in which this came into force. Okay. So these are two small questions to test you on the understanding. Okay. All right. Now, I gave you a huge variety of scope, a huge variety of what you can say, employee benefits, VRS, gratuity, retrenchment, termination, long-term service award, retention bonus, PF, ESI, everything. So what is covered? Basically, all employee benefits stand covered. All employee benefits stand covered. How am I going to classify my employee benefits? they will be classified under four categories. They will be classified under four categories. Sir, what are those four categories, sir? Those four categories are, first one is short-term employee benefits, which are basically payable within 12 months from the reporting date. It is essentially for current employees. It does not include termination benefits. Okay. So short-term employee benefits, number one. Second category is post-employment benefits. You complete your employment and then you get like gratuity, pension, leave encashment on retirement, etc. Okay. So gratuity, pension, etc. You complete your employment. You superannuate. Other long-term employee benefits, this is like a residual category. Okay. A retention bonus, jubilee service award, long-term service award. All these go ahead and become your other long-term employee benefits. And finally, you are having something known as termination benefits. You are having something known as termination benefits. Here, termination benefit is a very peculiar benefit. यहाँ पे you are giving benefit because the employment is terminated. Because the employment is terminated before retirement. This is not related to the service provided, but this is related to the fact that you are terminating the employee. So just the time when you book the expense changes here. It does not depend on the service provided tenure, but it depends when the trigger happens for the termination benefits to be recognized as a liability. That's the only difference. So you are having four categories. Out of these four categories, the most important one is post-employment benefits. The most important one is post-employment benefits. Coming to scope exclusions, I told you one of the payment is ESOPs. ESOPs is not covered under Ind AS 19. It is going under a different standard altogether. That is Ind AS 102. So ESOP, though it is an employee benefit, is going under share-based payments, which I presume you would already have studied. Okay. VRS is a form of termination benefit. It could be voluntary or otherwise. Okay. All right. Now, okay. Accounting and report by employee benefit plans is what is excluded here. What is employee benefit plan? I'm going to discuss when I do post-employment benefits. Okay. So now the question is, who is an employee? Who is an employee? Benefits तो हो गया भाई, benefits देखा हमने. The question is, who is an employee? It includes my full-time workers. It includes my part-time workers. It includes permanent workers. It includes my casual or temporary basis workforce. It includes my casual or temporary basis workforce. Basically, there should be an employer-employee relationship. What is required is a contract of service. We require a contract of service and not a contract for service. Okay. Contract of service is your normal employment contract. So there was a question that was asked, that is contract labor included here? If you have employed an agency, that agency gives the workers to you and you make the payment directly to that agency, and these employees are on the payroll of that agency, then that will not be treated as an employee benefit because you have entered into a contract for service. Okay. So suppose you have Mr. X who is working for that manpower supply service. Mr. X is unwell. So in place of Mr. X, Mr. Y will come on a particular date. So are you controlling who will come, who will not come? Answer is no. It's controlled by the contract service provider. And therefore, payments made by the principal employer to the contract service provider is not an employee benefit. It is a regular payment, okay, under a contract. But payment made by the contract service provider to his employees will be regarded as an employee benefit. I understand the confusion could arise from the fact that the principal employer is often made liable for PF, ESI, etc. in case the manpower supplier fails to discharge his or her obligations. That is done to protect the rights of these employees. But otherwise, there is no reason for including these employees as the employees of the principal employer. That relationship is not there between both of them. And therefore, payments to contract service providers are not covered under Ind AS 90. Okay. So when I talk about benefits to be paid to whom, it is a very wide scope. It could be benefits paid to employees, their dependents, beneficiaries, settled and may be settled by payments in the form of or provision of goods or services. That means even cash or kind made either directly to employees, their spouses, children, or other dependents, to legal heirs or nominees, or to others such as trusts or insurance companies. So this is the broad coverage of Ind AS 19. Only two things are excluded. One is ESOPs, it's covered separately. Second one is accounting and reporting by employee benefit plans. What is employee benefit plan? We are going to see in tomorrow's class. Okay. So is it okay? Are we clear with that? Yes. Are you clear with the scope? Anybody has any doubts here? Can we proceed further? Yes. Jigar has confirmed. What about the others? No doubts. Okay. Fine. Oh, Geeta is there. Yes. Okay. All right. So now let us move on to the next part. We are now going to study these four segments. Okay. So the first segment, I start with the simple one, that is short-term employee benefits. Okay. So what do you mean by short-term employee benefits? This slide covers everything. Okay. Then we move on to short-term compensated absences, which is a little tricky. Okay, I won't say complicated. It's a little tricky. एक बार आपको concept समझ में आ जाएगा. You're done with that. Okay. So here we are looking at simple, straightforward accounting. It could be your salaries, wages, social security contribution, your leaves, paid annual leave, sick leave, your profit sharing and bonuses, and certain non-monetary benefits. Okay, non-monetary benefits, rent-free accommodation, perquisites which are given, driver, gardener, company vehicle, all of that will go and sit as your non-monetary benefit. Okay, so now how do I do the accounting? Okay, just give me a minute, please. Yeah, sorry, some bad cold little bit. Okay, all right. So let us start. Short-term employee benefits. Very simple. Salary, PF, ESI, etc. Whatever you are doing, you are going to pass the entry expense account debit to liability if you don't pay. If you pay, expense account debit to cash bank. You do a straightforward, no discounting, nothing, because the payment is expected to be made within 12 months. So what is the entry you are going to pass? Expense account debit to liability if it is not paid, to bank if you are going to settle it. So this is going to be the first part. The second part is, if this expense, if these employees are going to be utilized for the purpose of constructing a self-constructed asset. Okay. Like for example, you have these Raheja builders. Okay. Or you have Hiranandani constructions. Okay. You have these huge builders. Now, suppose Raheja decides to build their own office. वो बोलते why should I hire somebody? I am only a developer, na? So I will put my own employees to construct my office premises. You would have studied Ind AS 16, self-constructed assets. So in this case, the salary that is payable to these employees has to be capitalized in the cost of the asset. So ultimately, if that is the case, then the entry will be asset account debit to bank or employee liability payable, which you will be settling. So here, the standard says you either record it as an expense, or if any other standard requires it to be capitalized, you do the accounting under that standard, and therefore it will be capitalized. So whether it is my own office premises, whether I build an immovable property to give it on rent, capitalize under Ind AS 40, whether I am doing it for development of my intangible asset, I will capitalize it under Ind AS 38. Yes. So all these examples tell us that you are going to have to record the employee benefits as a part of the cost of the asset, as a part of the cost of the asset. So that's it. So you have seen that now. This is the journal entry. Actuarial assumptions are not required. What is actuarial assumptions will come in tomorrow's class. Okay. Because actuarial assumptions are not there, no possibility of actuarial gain or loss. Okay. What is this? This also will come in tomorrow's class. Measured on an undiscounted basis. Undiscounted basis. No specific disclosure under Ind AS 19. Other disclosures may be required like Ind AS 24. Okay. Now, there is a case where entity's expectation of timing of settlement is temporarily changed, then you will not change the reclassification. But if you decide to defer it beyond 12 months, then probably you will have to consider whether it will be a short-term employee benefit or whether it will go and sit as a long-term employee benefit. Okay. So that is what this is all about. Okay. So short-term employee benefits, no confusion. Short-term employee benefits, no confusion. The next 1 to 1.5 hours, we are going to spend on perhaps the only complex topic under short-term employee benefits. And that will complete short-term employee benefits today. Okay. So we are going to discuss something known as short-term compensated absences. We are now going to discuss something known as short-term compensated absences. The notes, the PPT contains everything. You don't have to write down anything, just understand. Okay. Now, Short-term compensated absences means leave encashment. It means a leave encashment. But this is not the leave encashment which you get at the time of retirement. No, that is long-term leave encashment. That is not covered here. This is short-term leave encashments. Okay. Now, short-term compensated absences are typically classified into two broad categories. The first one is non-accumulating short-term compensated absences. Okay. Non-accumulating short-term compensated expenses. Short-term absences. Okay. And the other side, you would be having the opposite. Accumulated short-term compensated absences. You would be having two. Okay. Now, yes, accumulating, non-accumulating. Okay. Now, what do you mean by non-accumulating short-term compensated absences? Non-accumulating means no carry forward of leaves permitted. No carry forward of leaves is permitted, number one. Second is no cash payment for unutilized leaves. No cash payment for unutilized leaves. Okay. So there are two types. No carry forward, no cash payment. Matlab, if you are given these leaves and you have not taken them, you came for work, it basically means that you have not utilized, these leaves are going to lapse. You did not avail the facility, so you as an employee are the loser. You are not going to get any extra benefit by virtue of not utilizing these leaves. Are we clear with this? Yes. So let us take a case. Suppose the salary for the year is 5 lakhs. And let me make things simple. This is a salary for the purpose of coming for work for 200 days. So we have 52 Sundays, 52 Saturdays. So that takes out 104 days from the working cycle. So 360 में से 100, 260. बाकी का इधर उधर करके I've just kept it 200 working days are there. Okay. Or we make it a little realistic. 250 days. Salary is 5 lakh for 250 days. That's it. Now, out of 250 days, you are given 10 days. What for? Sir, I am given 10 days for the purposes of availing. And if I don't avail these 10 days, it will lapse. It will lapse. That means, basically, if you look at the way the thing is structured, you are going to get 5 lakhs even if you come to work for 240 days. Are yes or no? Tell me, am I correct? You are going to get 5 lakhs even if you come for 240 and not for 250. Are we clear about this? Yes? Yes? Okay. Now, suppose I come for 243 days. That means I took leave of only 7 days. I did not take a leave of entire 10 days. So therefore, I have a leave balance of 3 days. What do you think? Do you think that the salary is going to increase because the employee has worked for 3 extra days? Yes, Mohammed, what do you think? By virtue of coming in for 3 extra days, do you think the salary is going to increase or it will remain the same? What do you think? It will not increase. Absolutely right, Jigar. That's right, Tanisha. That's right, Jigar. Correct. So there is not going to be any increase in the salary. There is not going to be any increase in the salary. Are we clear about it? Yes. So therefore, you can look at this. Non-accumulating paid absences cannot be carried forward. They lapse if current period's entitlement is not used in full. That's right. Okay. So therefore, when does the obligation arise? Obligation arises when absences occur because employee service does not increase the amount of benefit. What does this mean? See, what does this mean by saying that liability arises when absences occur? See, I have to pay him for 250 days. Yes. वो 10 दिन नहीं आएगा. He will not come for 10 days. Even then I have to pay him. That means one day he does not come. I still have to pay the salary to him. 2 days he does not come. I still have to pay 2 days salary to him. 5 days he does not come. I have to pay 5 days salary to him. 10 days he does not come. I have to pay that salary to him. 11 days he does not come. 1 day's salary I will not pay because he has exceeded the utility. He has exceeded the salary limit, that is the leave limit that is laid down. And there I am going to see there is what I am going to see a reduction. There is what I am going to see a reduction in my employee benefit expense. But until 10 days leave, am I going to reduce my liability? Answer is no. Your obligation starts hitting only because employee did not come. See, in a nutshell, you can understand it like this. Okay. In a nutshell, understand it like this. 5 lakh salary is for 250 days. So per day salary comes to how much? Per day salary. This is just for your explanation. You don't have to note down anything. Per day equals 2000. Per day salary equals 2000. That means he comes for 200 days into 2000. So that is equal to 4 lakhs. That is equal to 4 lakhs. He comes for 240 days into 2000, 4 lakh 80,000. 4 lakh 80,000. Is this going to be his only salary? Answer is no. Thus, then 10 days leave you have given him. 10 days leave you have given him. Therefore, even if he does not come, his obligation is building up. Yes or no? So on the 241st day, on the 241st day, when he does not come, on the 241st day, when he does not come, do I have to pay the salary to him? Answer is yes. So that means the obligation increases or not when he is absent. When he is present, so it is very normal, uska salary increase hoga. But when he is absent, is the salary increasing? Answer is yes. And therefore, you are going to pay him extra 2000 for the 241st day. You are going to pay him extra salary of 2000 for the 242nd day. 10 days you take leave, then also you will pay 2,40,000 completely. अच्छा 10 के बदले 7 days छुट्टी ली. Yes, then what will be the payout? Then also it will be 2,50,000 with the obligation increasing for that particular tenure. With the obligation for that particular tenure. Are we clear with this? Yes. Are we clear? Recognition based on the absences occurred. Recognition based on the absences occurred. Are we clear? Yes. Mohammed, Tariq Ahmed, Tanisha. Saravanan directors also, if they are employees, they will be included in the Ind AS 90 employee benefits. Okay. Independent directors, non-executive directors won't be included. Okay. Yadu has confirmed, Shruti has confirmed, yes. And Tanisha has confirmed, yes. Everybody has confirmed. Good. So now let us move on to the next part. Jigar also confirmed. So now let us move on to accumulating paid absences. Accumulating short-term compensated absences. What does it mean? What does it mean? सबसे पहले we start from there. What do you mean by accumulating? This is into two types. This is classified into two types. Sir, what are those two types? The first one is vested. The second one is non-vested. Vested accumulating short-term compensated absences. And the second one is non-vested accumulating short-term compensated absences. Are we clear with this? Yes. Yes. So therefore, what is the difference between vested and non-vested? Vested means you are going to give cash in exchange of, you are going to give cash in exchange of leaves unutilized. In absence of, in exchange of leaves unutilized. 10 days you had to take a leave. 7 days you did not, you took a leave. 3 days you did not take a leave. You are going to get, you are going to get the 3 days salary. You are going to get the 3 days salary because this is a vesting non-accumulating, a vesting accumulating short-term compensated absences. Are we clear with this? Yes. Are we clear? Yes. Clear? Okay. Next. Non-vested means what? You are not going to get cash. You are not going to get cash, but you are going to carry forward. You are going to carry forward the leaves to the next year. You are going to carry forward the leaves to the next year. So basically, 7 days leave you have taken, 3 days you did not take, carry forward 3 days to the next year, and at the end of the next year, you are going, at the beginning of the next year, you are going to have 10 plus 3, 13 days leave that you can avail. Sir, why 13? Because 3 years has come, so 3 days has come from the previous year. And therefore, 10 plus 3, if you avail 13 days leave, then also you are not going to have any problem as far as the HR policies are concerned. Are we clear with this? Yes. Did you understand vested and non-vested? Yes. Did you understand vested and non-vested? Yes. Yes. Now, please don't say, sir, इसमें क्या था? It is so simple. It's not. It's not. Okay. So let us try to understand more on accumulating paid absences with this particular question. Okay. I want you to read illustration one, which is a part of your study module. I want you to read illustration one, which is a part of the study module. Read illustration one. Try to understand what type of short-term compensated absence it is and calculate the total employee benefit expense for the year. Don't look at your study module. Try to solve it by yourself because that is the way things can be understood. Yes. Read and try to solve this. That is absolutely right, Yukta. That's right. Yes. So Yukta has correctly identified the short-term compensated absence type. I want the others also to identify. Tanisha, Yedu, Jigar, Shailesh, Viraj, Shankar, Geeta, Mafita. Yes. What type of Jigar has also given the right answer? Yes. Akshara has given the right answer. Yes. Okay. Good. Very good. Yes. So now the question is, yeah, good. So somebody help me out with the total employee benefit. It's not asking only the leave encashment, it is asking total employee benefit. Shruti is right. Yes, I'm waiting for other answers. Yes. Okay. Read this sentence. The unutilized leaves are settled by way of payment. That's it. That's it. Unutilized leaves are settled by way of payment means it means that you are going to get cash for the unutilized leave. So this becomes a vested accumulating short-term compensated absence. And therefore, for the unutilized leave, I have to determine what will be the cash that will be paid. So, annual salary is 30 lakhs, working days is 300, So they have made the per day salary to come out to 10,000. They have made the per day salary to come out to 10,000. Yes, are we clear with this? Yes. Now, let us proceed further. Let us proceed further. The company allows 10 days of leave to be taken. Out of 10 days, only 8 days are available. So therefore, 2 days is still unutilized. This unutilized, can I take it forward? Answer is no. You will be converting it into cash. So how will I convert into cash? Per day rate is 10,000 into 2, 20,000. Therefore, total employee benefit expense equal to 30 lakhs plus 20,000. 30 lakhs, 20,000. That's right. That's right. Absolutely right. Mohammed has given a detailed answer. Absolutely right. Great. All of you are perfect. None of you made a mistake. 30 lakh 20,000 rupees is your total employee benefit expense that will hit the profit and loss account. Okay. Yes. Now, the next question is where things start to get interesting. Okay. I want you to read illustration 2. I want you to read illustration 2 and tell me which type of short-term compensated absence it is. Okay. That's it. Read the question. Do not try to solve it. Only try to understand what type of short-term compensated absence it is. Yeah. Yes. Everybody has given the right answer. It is a non-vested accumulating short-term compensated absence. Why? Because leaves unutilized carried forward to the next year. This is there. Okay. Now, let us now proceed to solve this question. Okay. Let us now proceed to solve this. It's a very interesting question. Module made the solution is given in a very simplistic manner. Okay. All right. I could refer that also if you want. It's given in exactly the same way, but still it's better that I write it down. Okay. Annual salary 30 lakhs. Okay. Now, number of working days 300. Leaves allowed 10. Leaves taken. If you look at the question, first year 7, second year 30. Therefore, number of days worked, it is going to be this minus this. Okay. And finally, what they have said is infotech content. So this is what the company has contended. This is what the company is saying. Infotech contends that it will record 30 lakhs as employee benefit expense in each of the years X0, X1 and X1, X2, stating that the leaves in any case will be utilized by X1, X2. Okay, it's a short-term case, so the carry forward will be allowed for one further year. That's it. Okay, so now what the company is saying is this year I give 10 days leave, next year I give 10 days leave. So both the years I am giving 20 days leave. So he is availing it as 7 days in the first year, 13 days in the second year, 7 plus 13 equal to 20. So 20 days leave is availed in both the years, standard also and actual also. So that is why the company wants to book the expenses at 30 lakhs. Expense proposed to be booked. They want to book 30 lakhs. Okay. Okay. I want you to tell me, don't read anything. Don't open the book. Don't read anything. Don't even check where is the slide. इतने से डेटा से just look at what is there on the screen in front of you, what I have written, and tell me, is this correct? What the company wants to do? If it is not correct, why it is not correct? If it is correct, how it is correct? Okay, just answer me these two questions. First one, if correct, how? Second one, if incorrect, why? Give me the answer to these two questions. Okay. Jigar is given one answer. What about the others? If you can try to key in the reason why you feel that is your answer. Okay, if you can. I know it's difficult. Okay. Shruti has given the answer. Reasoning Shruti. Jigar has given the right answer. Yes. Geeta, Tanisha, Mohammed, Yadu, Akshara, Yukta, what do you think? Shailesh, Viraj, Usma. Okay, okay. Shruti, your reasoning for your answer? Yes. Okay. Most of you are saying it is incorrect, which is right. वो ठीक नहीं है. The company's contention that I will book 30 lakhs in year one and 30 lakhs in year two, because in any case he is availing 20 days leave over the 2 year period as per the company's policy is not correct. Now, why it is not correct? It is not correct because in the first year, the employee has come and worked for 293 days. In the second year, he has worked only for 287 days. That means there is a 6 day gap. There is a 6 day gap. And because the work is more in the first year, the employee benefit expense also should be more. That's right, Mohammed. Right? Since, since, since in year one, I have worked for 293 days, I should record a higher expense. In year two, I have worked for 287 days and therefore I should book less. The total of both may be 60 lakhs. I don't deny that. But it cannot be 30 and 30 equally, because understand the fundamental principle. As the employee renders the service, the company should record the benefit expense. In the first year, employee has rendered more service, therefore more expense should be recognized in the first year. Payout will remain 30 lakhs. Payout will remain 30 lakhs. Those of you who feel it is correct probably would be thinking that payout will change. I'm saying again, payout will be 30 lakhs only in both the years. But expense to be booked is going to be different. Expense to be booked is going to be different. Sir, how is that? करके बताओ. Explain to us. Okay. Well, see, year one, the employee came for a net period of 290 plus 3 days. Am I right? Yes. Sir, why are you taking 290 separately? Because if he had to come even for 290 days, he would be getting a salary of 30 lakhs. He would be getting a salary of 30 lakhs. But he has come for 3 extra days. And these 3 extra days are getting carried forward to year two. These 3 extra days which he has come, it is getting carried forward to year two. And therefore, this is going to be 10,000 into 3 days. So that is going to be 30 lakh 30,000. That is going to be 30 lakhs 30,000. Sir, ये तो expense हो गया, but payment was going to happen of 30 lakhs only. That's right, because this is not vested accumulating absence. This is not vested accumulating absence. This is a non-vested accumulating absence. This is a non-vested accumulating expense. That means the leave that I have in my balance is getting carried forward. That means employee will say next year I can avail 13 days. Next year I can avail 13 days. But for you as the company, what does that mean? That means next year you have an obligation to give 3 extra days of leave to the employee. In the current year, you have an obligation to give 3 extra days leave to the employee. That means in the next year, even if he does not come for 13 days, you are still under an obligation to pay him the full amount. Okay. So year one, 290 plus 3 days, 30 lakhs plus 10,000 into 3. Expense to be recognized is 30 lakh 30,000. Now, in year two, what am I going to do? 287 days. 287 days. Yes? Yes? So, what is this 287? This is basically nothing but he had to come for at least 290 days, but he did not come for 3 days. He did not come for a tenure of 3 days. And therefore, this is going to be 30 lakhs. But will there be any reduction? Answer is yes. In the expense, there will be a reduction, because he has worked for 287 days only. So 10,000 into 3. ₹29 lakh 70,000 is the expense which you are going to recognize, because you have come to the factory only for 287 days, whereas you should have come for 290 days. Okay. So what is the entry that will be passed? What is the entry that will be passed? Year one, the entry will be employee benefit expense account debit. No. 30 lakh 30,000. 2. Bank. Payout has happened of 30 lakhs and to provision for leave encashment. 30,000. Provision for leave encashment, 30,000. Absolutely right. Okay. Now, in year two, employee benefit expense will be debited with 29 lakh 70,000. 29 lakh 70,000. Sir, has he taken the leave within the approved limits? Answer is yes. Only what was unutilized is what he has availed now. So he should get the full salaries. He should get the full salary. And therefore, this is going to give you 30 lakhs minus 29 lakhs 70. This 30,000 is nothing but the reversal. This is nothing but the reversal. Are we clear with this? Yes. Are we clear with this? Provision for leave encashment. Provision for leave encashment. Yes. All clear? The whole confusion where some students didn't message that 30 lakh appears to be correct, sir, is because you are thinking that, see, employee is there for the tenure and he is not deviating from the expected leaves also. There is a carry forward facility for 1 year. There is. Okay. But he is availing the carry forward also within the he is availing the carry forward also within the limit that is put on the employee, right? So therefore, okay, so you have not understood the second journal entry. See, second journal entry, he has come for a total of 287 days. Okay. What is 287? Sir, 287 is nothing but 290 minus 3. 290 days के लिए the salary cost is 30 lakh rupees minus 3 दिन का salary. He has not come for 3 days. So why are you going to pay him 3 days salary? I will not pay him 3 days salary. And that is why I am deducting that 3 days. So 30 lakhs minus 30,000, that gives you 29 lakh 73,000. That gives you 29 lakh 70,000. Okay. Now, tell me, total leave allowed is 10 days. He has taken 7. Unutilized leave carried forward is another 3. So 10 plus 3, that gives you a total leave balance of 13 and leave availed is 30. And therefore, unutilized carried forward to the next year is 0. Unutilized carried forward is 0. Are we clear with this? Yes. So because unutilized carried forward equals to 0, therefore, entire 30 lakhs is what is payable to him. So this is what is payable. What is expenses on the lower side? 29 lakh 70,000. But in between, you had a provision for leave encashment, which was appearing at 30,000 in the previous one. This is 3 days leave liability. 3 days leave liability. This liability is now getting extinguished, is now getting paid off. Okay. So this is nothing but liability paid off or settled. Liability settled. Because I had a liability to give him 3 days leave, which he took it in the next year. So therefore, the liability tha, I have to eliminate that. So I am eliminating that by virtue of this entry. And therefore, we are having a credit in the first year to provision for leave encashment, followed by a debit of the same amount in the next this thing. Okay, in the next year. Are we clear? Yes, sure. Anybody has any doubts? Anybody has any doubts, difficulties, etc.? Yes. Yes. Tell me. Everybody clear? Clear. Okay. Yukta, your question I will answer in detail after the break. Okay, it is 8:48. We shall resume at 9. Take a 10-minute break. All the iterations, leave taken, leave not taken, excess taken, short taken, everything we will address in the next session, in the post-break session. Okay. I'll come to that. I'll come to that. Okay, don't worry. All your queries relating to this will be solved out. For now, this is the treatment. What will happen if he has taken extra? What will happen if he has taken less? Everything we are going to answer. Okay. All right. Take a quick break of 10 minutes and we resume at 9. We resume at 9. Okay. All right. So welcome back. So coming to this question, let us have a couple of ifs and buts and a lot of combinations. Yes. Now, sir, ये तो sir, this is academic, sir. Academic life में you are able to see both the years together and you are able to give the answer, sir. Now, suppose instead of 3 days, I will first take the queries which I have received. Then I will put in my own queries. You will give the answer to both of them. Okay, you will give answer to both of them, and that will kind of close the topic and make you understand how short-term compensated absences work. So first one is, what will be the treatment if 4 days of leave is taken? I presume, Jigar, you are asking 4 days of leave is taken in the second year. Okay. I am presuming that you are asking if 4 days of leave is taken in the second year. So first year you are taking 3 days of leave. Second year you are taking 4 days of leave. That is what I understand. Okay. So now what Jigar is asking is, instead of 4 days of leave is taken. So therefore, instead of 30,000, this will be 40,000. So this is going to be 29 lakh 60,000. This is going to be 29 lakh 60,000. If this is 29 lakh 60, sir, my payout is going to be 30 lakhs only. My payout is going to be 30 lakhs only. And since my payout is, sorry, my payout cannot be 30 lakhs now because you have availed one extra day than what you are entitled. The employee had a total entitlement of 20 days over the 2-year period. 10 in the first, 10 in the second with a carry forward benefit. With the carry forward benefit. He did not take 20, he has taken 21 days. And because he has taken 21 days, it means he has taken one extra day leave, and one extra day leave means 1 day's salary equal to 10,000 that will be deducted. So from 30 lakhs, you deduct 10,000, you are going to get a payout of 29 lakh 90,000. This will be the treatment if he has taken a 4-day leave in the second year. Yes, Jigar, I hope your doubt is satisfied. I hope you have understood the question. Okay. Now the next question. Yukta has asked, sir, what if he does not take 3 days of the leave in the next year? That means I presume that you are asking he takes 0. He does not utilize that 3 days leave. Correct me if I am wrong. Okay. Yukta is asking, what if he does not take 3 days leave? That means, let me presume she is asking, that he takes only a 1-day leave. He takes only 1 day of leave. Okay, fine. Now, just a second. 1 day. So now, so this will be 29 lakh 90,000. So employee benefit expense is going to be 29 lakh 90,000. Employee benefit expense is going to be 29 lakh 90,000. Provision for leave encashment is going to be first out of 30,000, 1 day leave is being taken. So 10,000 I will reverse and make the payout as 30 lakhs. Yeah, usko 30 lakhs to milega. There is no doubt in this. There is no doubt in this. But now the question is, my balance in the provision for leave encashment is going to be 20,000 credit. Is going to be 20,000 credit. How 20,000? Opening 30, utilize 10. So balance remaining will be 30. I am not allowed to carry the first year to the third year. These are short-term absences. Short-term absences means within the next 12 months. That means this year carry forward, zyada se zyada it will go to the next year. It will not go to the year after that. That means what? That means you are going to have a 2-day leave getting lapsed. A 2-day leave getting lapsed. And if that leave is getting lapsed, then you will have to reverse the provision at the end of the second year. So at the end of the second year, we will write back this provision. Provision for leave encashment debit 20,000 to employee benefit expense. It's not an income, it is going towards reduction of my employee benefit expenses. It is going towards reduction of my employee benefit expenses. Are we clear with this? Yes. Are we clear with this? Anybody has any doubts? Yukta, are you clear? Jigar, did you understand the 4-day leaves? Where is everyone here? Nobody has come after the break. Yes, people are watching. Yes, is it clear? Mansha only has answered. Clear. Shruti has confirmed. Yukta has confirmed. Tanisha, did you follow? Geeta, did you follow? Yadu, did you follow? Manoj, did you follow? Muhammad, Tariq, did you guys understand? Akshara, did you follow? Shailesh, Sharavanan, did you follow? Yes? Okay, fine. Good going. Okay, all clear. Now, let me add a little twist to the story. Okay, let me add a little twist to the story. Okay. जरा समझते हैं crooked people how they can think. Let us try to understand them. Okay. First day, see what the standard tells. Let us understand what the standard tells. The standard tells that we should recognize a provision for the unutilized leaves to the extent of the estimate of how much of those leaves will be availed in the future. Understand the words. We should recognize a provision for the unutilized leaves to the extent of an estimate of how many of those leaves will be availed in the future. That means it's not mandatory for you to recognize entire balance 3 days as a liability. You can say that I will recognize a liability only for 1 day because I estimate that this employee is going to take only a 1-day leave later on in the future. So the standard gives you this guidance. The standard tells us that you have to recognize a provision based on an estimate of the leave he will avail in the future which has been carried forward. So now I estimate that he will not avail entire 3 days. He will avail only 1 day. And therefore, I will make a provision of 30 lakh 10,000. Why do you think companies will do this? To increase their profitability. Suppose the first year the CFO wanted high profit. He saw that here there is a way he could do little bit of tweaking around with the figures. इसको tweaking around बोलते हैं. It's a fraud, but apparently it's an estimate. So therefore nobody will question it is what is the presumption. So I presume my employee will take 1 day in the future out of this. So next year he will take 10 plus 1, that is 11 days. So therefore, the entry that will be passed is going to be employee benefit expense 30 lakh 10,000, to bank 30 lakhs, to provision for leave encashment 10,000. Are we clear with the first part? Are we clear with the first part? Yes? Yes, we are clear. Now, the next part. If he takes only 1 day, it becomes the same story like we did at the beginning of this problem. But suppose he takes not 1 day, but the full 3 days. That means I see Geeta's question, which is on the same line. If he takes more leave than what is allowed nahi hoga bachcha, this is going to be then what is estimated. Okay. I estimate 1 day, but can he take 3 days? Can he take 3 more days? Answer is yes. Because whatever is the first year backlog, entire thing is carried forward to the second year. So by मैंने carry forward कर दिया, I carried it forward to the next. And now when I carried it forward to the next, what is going to happen is you are going to pass the entry like this. You are going to pass the entry like this. He has taken 3 days leave. So 30 lakh minus 30,000. So that gives you 29 lakh 70,000. 29 lakhs 70,000 rupees is what is my liability, is what is my expense that needs to be recognized. Logic is simple. He came for 290 days minus 3 days. So I should pay him for 287 days. 287 days will be 29 lakh 70,000. So my employee benefit expense is going to be 29 lakh 70,000. Yes. No doubt here. My payout is going to be 30 lakhs. There also no doubt. There also no doubt. But just a second. Okay. Now, there is a mismatch. My leave encashment has a balance of only 10,000. So I can set off only 10,000. मैं 30,000 set off नहीं कर सकता because in the previous year I had estimated that he will take only 1 day in the future. But he has not. He has taken full 3 days. So 2 days extra he has taken. Is he within the rights to take that? Answer is yes, he is within the rights because HR provides him that facility. So now, what do I do of this balance 20,000 which he has taken? This balance 20,000 is regarded as a change in accounting estimate and recognized as employee benefit expense in the year in which that additional leave is taken. Additional leave compared to the estimate. Additional leave compared to the estimate is taken. And therefore, Ind AS 8, if I presume, that deals with your prior period errors, etc., also talks about an estimate, and this is an accounting estimate change that has happened because you estimated he would take 1 day leave in the future. He has taken 3 days leave in the future. So therefore, 2 days extra he has taken. So the 2 days extra salary will be debited. The 2 days extra salary will be debited in the second year as a change in accounting estimate. It is neither an error nor is it a prior period item. It is a change in accounting estimate and will be recognized as an expense for the second year. Are we clear with this? Yes. He has taken more leave than what was estimated. Are we clear with this? Yes. Are we clear with this? Anybody has any doubts here, guys? Please tell me. Please tell me. Yes? Clear? Okay. Geeta, did you follow? I hope that was only your query, Geeta. If anything else is there, let me know. Shruti, did you follow? Yes? Tanisha, Jigar, Yadu has confirmed. Mohammed, Manoj, Tariq, Yukta, Akshara, Shailesh, Suresh, Saravanan, Kusuma. Did you guys follow? Yes. Viraj, Shankar, did you follow? Clear? Okay, fine. So that takes care of short-term compensated absences. Okay, we just look at the problems once. This question is done. Comment on the accounting treatment. I cannot allow 30 lakhs as an expense in both the years because it is violating the matching principle. First year expense will be 30 lakh 30,000 with a provision for leave encashment getting created of 30,000. Second year will be 29 lakh 70 and the leave encashment provision of 30,000 getting reversed. Okay, so that takes care of illustration 2. Moving on, illustration 3. Based on past experience, Infotech assumes that Mr. Niranjan will avail the unutilized leaves of 2 days subsequently, but actually he has availed 3 days. Same. I did it with 1 and 3. Here they are saying 2 and 3. So the change in accounting estimate is 1 day. So you are going to have 10,000 rupees as an additional expense in the second year. Okay. So that is something which you can try it out. So this is also done for homework. Are we clear with this? Yes. Are we clear? Absolutely clear. I don't want anybody of you to say that you have not understood short-term compensated absences. Okay? Yes. Okay. So let us move on to the next. Let us move on to the next. All right. Now, illustration 4, I'll just pick it up from your study material because it's a fairly simple question with no major difficulty. Okay, just a second. Yeah, okay. So this is 8.16. Okay, same question. Sundaram has a headcount of 100 employees. As per the employee policy, the employees are entitled to 30 casual leaves, out of which 10 may be carried forward to the next year, 10 sick leaves, out of which 2 may be carried forward as paid leave. So 30 may say 10 carried forward, out of 10, 2 carried forward. At 31st March 20X1, average unused entitlement is 5 days per employee for casual leaves, 1 day per employee for sick leave. On an average, it is found that the number of such employees who would be claiming casual leaves would be 30 and 10 employees who would claim sick leaves. Compute the liability to be recognized in respect of sick leaves and casual leaves by the entity. They have not given us rupee amounts. So we will have to give the amount in equivalent salary in number of days. So first case, casual leaves, 30 out of which carry forward is 10. Our average leaves unutilized is 5. Number of employees would be 30. So 30 into 5, 150 days salary. Second case, 10 out of which 2 is carried forward. 1 is going to be utilized in the future. 1 will remain unutilized. Number of employees 10. So 10 into 1, 10 days of salary. The entity will therefore recognize this closing liability. 150 days of paid casual leaves, 10 days of paid sick leaves. Are we clear? Yes. We look at the next illustration. This is done. Next, illustration 5. Illustration 5. Again, a very simple illustration. Yes. An entity has 100 employees, each entitled to 10 working days of paid sick leave for each year. Unused sick leave may be carried forward for 1 financial year. Sick leave is first taken out of current year's entitlement and then out of any balance brought forward from the previous year. That is on a LIFO basis. Okay. At 31st March 20x1, average unused entitlement is 2 days per employee. Based on past experience, management expects that only 20% of employees will use 1 day from their carry forward leave. Salary per day is 2,500. Compute the expenses in respect of short-term compensated absences if they are assumed to be vested short-term compensated absences. What do you mean by vested? Vested means against the leave, you won't get carry forward option. You are going to get cash settlement option. You are going to get cash settlement option भी नहीं है आपको cash मिलेगा. You are going to get cash. So if it is a vested short-term compensated absence, the employee benefit expense to now be recognized is going to be how much? How many employees are there? 100 employees into how many days? How many days? Based on past experience, the average unused entitlement is 2 days per employee. So this is going to be into 2 days into salary per day is 2,500. So this becomes 5 lakhs. This becomes 5 lakhs. What do you mean by non-vested SCA? Sir, non-vested means हम carry forward करते हैं. We don't get cash, but we are carrying forward the leave. So here we are going to have estimates come into play. So look at the drastic change which happens with estimates. I have 100 employees. He is expecting that only 20% will use. So 100 into 20% into 1 day they will use and they will multiply it by 2,500. So 100 into 20%, that means 20 into 2,500 rupees 50,000. Rupees 50,000. Are we clear? Yes. Any doubts, anybody? Anybody has any doubts? Yes. Clear, everyone? Okay, chalo. Let's proceed further. Okay. Now, this is an interesting question and the last one on short-term compensated absences. Okay. So Acer Limited has 350 employees, same as an year ago. Average staff attrition rates observed during past 10 years represent 6% per annum. So staff attrition rate is 6% means what? New staff will be 6%, old staff will be 94%. Will be 94%. Okay. Now, Acer provides the following benefits to all its employees. Paid vacation, 10 days per year, regardless of date of hire. Very nice. I wish I could join this organization where on the last day also, if I join, I will get 10 days of paid vacation. Okay. Compensation for paid vacation is 100% of employee's salary and unused vacation can be carried forward for a period of 1 year. As of 31st March X1, unused vacation carried forward was 3 days per employee. Average salary was 15,000 per day. Accrued expense for unused vacation in the previous year was 65 lakhs. During X1, X2, employees took 9 days of vacation on an average. Salary increase was 10%. How would Acer recognize liabilities and expenses for these benefits as of 31st March 20 X2 and pass the journal entry to show its accounting treatment? Okay. Yes, I will give you 5 minutes. Read the question, try it out without looking at the answer in the study board. Yes, try it out. Don't look at the answer, please. Let us see how you are able to interpret. Shruti, for illustration 4, the liability you are creating is for the 5 unutilized leaves which you are carrying forward to the next year. It's not utilized. You had a carry forward entitlement of 10. You utilized on an average 5. So unutilized is 5. So you are telling the employee, I'm giving you 5 unutilized leaves. Next year, जाओ जाके मजे करो, take these 5 leaves and don't come to office. I'll still pay you the salary. That means what? You have unutilized leave and you are saying next month, next year, don't work, I'll still pay you the salary. That means the liability arising today in respect of those unutilized leaves. It's unutilized leaves, not utilized. You make a liability out of unutilized leaves always. Utilized leaves is not going to be a liability. Utilized leaves is going to be a reduction in the liability that has already been created. Okay. All right. Where are the others? Are you trying? Yet to try, sir. Not able to understand. Yes. Okay. Anybody got any answer for illustration 6? Liability for unused vacation. Okay. So I guess you are getting stuck up somewhere. Okay. So no problem. Where is Tanisha is not there. Okay. Viraj is there. Shailesh, are you there? Shankar, are you there? Manoj, are you there? Okay, fine. Let us start. Understand the question. It's a very, very interesting question. This is how the things will actually flow in practical life. Till now, whatever we saw was an academic basis. This is what it actually happens in life. Okay, in practicality. Okay. See, as on 31st March X1. See, first of all, you have to understand what the question is asking from you. The question is asking, recognize liabilities and expenses for these benefits as of 31st March 20X2. That means I have to recognize closing liability on 31st March X2 and what is my expense for the year X1, X2. Okay. Now, if I have to start computing my liability, I will start with opening liability, add liability during the period, less liability utilized, giving me the closing liability. Okay. So now let us talk about existing staff. Number of employees in service. Number of employees in service for whole year. This is 94%. This is 94%. Okay. 6% is the attrition. That means in the year, 6% employees would definitely have left. That means the remaining 94% were there. That means the remaining 94% are still there. So therefore, these 94% employees will have an opening balance to their leaves. Yes, we call that as unused vacation. Unused vacation as on 31/3/X1. Yes, unused vacation as on 31/3/20/X1. How much is that? You can check. As of 31st March, unused vacation carried forward was 3 days per employee. So this will be 3 days per employee. Next. Entitlement to vacation. What is my entitlement to the vacation? 10 days per year. So X1, X2, vacation. Vacation for current year. 10 days per employee. So you are having a total liability of 10 plus 3, that is 13 days. Out of which employees took 9 days of vacation on an average. So 31/3/X2. This is going to be 3 days per employee. So this is going to be, sorry, 9 days of vacation. So utilize this 9 days per employee. So therefore, my closing liability is going to be 4 days per employee. This is going to be your closing leave encashment. This is going to be your closing leave encashment. Are we clear with this? Yes, 4 days per employee. Is this clear so far? 4 days per employee. Yes. We will come to the amounts later. We will come to the amounts later. Okay. Okay. Yes. Am I clear? We are doing it year wise, na? Opening balance, X1, X2. See, they have asked you what? They have asked you to show the liability as well as the expense. So I need to understand what is my closing liability, what is my expense for the year. That is why we are doing it in this particular manner. Okay. Now, can you move on to the new employees? Newcomers, 6%. Can you prepare a similar table for the newcomers? What I prepared above. Can you prepare a similar table for newcomers? Yes. Can you prepare something similar for newcomers? Yes. For newcomers, it is fairly simple. Opening balance will not be there. So 20x1 x2 vacation for current year 10 days per employee. Less, less. Vacation availed 9 days. So you are going to be left with 1 day per employee. That's right. That's right. Okay. Now, what are my total employees? Okay. Let us now come here. Therefore, total unused vacation. Okay. Employees in service. See, I have 350 employees, 94% remain in service, and the unutilized vacation is 4 days per employee. So that gives you 1316. That gives you 1316 man days. Employees 350 into 6%. Somebody was saying 21. That's right. So this is going to be 21 man days. So 1337 man days. This is your closing liability. This is your closing unused vacation. This is the liability that will be there at the end of the accounting year. Are we clear with this? Yes. Anybody has any doubts? Anybody has any doubts? 1337 man days. This is total unused vacations. This is in man days. So now, if I have to convert the man day into rupees, I will need the salary cost per day. Do I have the salary cost per day? Yes. Average salary was 15,000 per day, and salary increase in X1, X2 was 10%. Salary per day is equal to 15,000 plus 10%. Sorry, 16,500. Therefore, provision provision for unused vacation is equal to 16,500 into 1,337 man days. So this gives you 2 crore 20 lakh 60,500. That's right now. So 350 into 6% is newly joined. 350 into 94% is existing. So total is 1,337 man days vacations which are there. Salary per day is 15,000 plus 10% on an average. So 2 crore 20 lakh 60,500 is going to be your unused paid vacation. Yes, are we clear? Okay. Sir, why to add 21? See, I have to add 21. See, at the end, I have, see, the newcomers had 10 days entitlement. Out of 10, they consumed 9. Yeah, 1 day liability, I have to give it to them, yes or no? I cannot say they are newcomers, I will not allot them. At the end of the year, I have to give it to them, I owe it to them. And therefore, I will have to transfer that amount. I will have to add that amount to the total in service liability because that would give the total liability of the unused vacations. Why do I need total liability of unused vacations? Well, because that is actually what is the liability the company owes on account of short-term compensated absences that it has given, on account of short-term compensated absence that it has to be given. Okay. So total calculation of new provision is 16,500 into 1,337 and provision for unused paid vacation. $65 lakhs. This would be paid off. Yes. Are we clear with this? Opening balance would be paid. Current balance is what hits the profit and loss. Okay, so employee benefit expense account debit. 2. Provision for leave encashment. Provision for leave encashment. Viraj, did you understand why we added 21? Yes. Did you understand? Anybody has any doubts? Any doubts? Any single doubt also you are having, please feel free to ask. Don't hesitate. I am willing to explain multiple times until you understand. I have to add 21 because that is also my liability towards unused vacation. 1,316 also my liability towards unused vacation. So total 1,336. Are we clear? See, obviously, last year leave encashment is paid under an assumption. Okay, it is paid under an assumption. You may write that it is not paid and therefore it's accumulated. Yes. So that is an assumption that it is paid off. Are we clear? Yes. Anybody having any form of doubts, discussions? Attrition means churning. That means at any point of time, 6% employees would remain. To the 6% employees, do you mean to say you are not going to give them the paid vacation? Is the term of employment like that? Or is it that whoever joins, we are going to give you these many number at a flat rate? Yes or no? Yes, I owe them because I have to give the leave encashment liability credit in my books. Yes, yes. Are we clear? This is the attrition beta 350 into 6%. This is the attrition. Employees newly joined. This is the existing one. So that attrition is taken. Attrition means what? Basically, current year I am having 6% out of the total workforce as current year joinees. Next year, there is another 6% attrition means another 6% will come and 6% is going to leave. Okay. That is the meaning of attrition. Attrition does not mean 6% खाली चले गए. If 6% of your workforce leave, it means you will have to bring them back through some other source. No? The positions have become vacant, but you will have to fill it, and therefore you will have to recognize the unused vacation entitlement even for those 6%. Does It does not mean 21 have left Viraj. It means 21 have joined in the current year and remaining have joined in the previous periods. That is the meaning of attrition. Please, please, please don't take that attrition is employees moving out always. Attrition means that is the churn which happens. Your employee goes, you bring another one in his place. The second one goes, the third in his place. The third goes, the fourth in his place. So that is the meaning of attrition. By virtue of attrition, you don't say that you will not take any business decisions till October. Yes, that is not going to be possible. Okay. You have to take business decisions for all the 350 employees in that particular category. Out of 350, 21 man days employees are fresher in the organization. 350 into 94%. That means basically whatever 350 minus 21 you are getting 329 employees. Those employees are having a carry forward. Yes, that is how it is. That is how it is. Yes. 21 left Viraj and you rehired them. Please don't confuse attrition कि वो हमेशा के लिए छोड़ के चले गए. Why are you going to reduce your head count? Tell me. Yes, it won't happen that way. Okay. They will come back. So they are freshers in the organization. Okay. So now that you have understood, this is how you are going to do the accounting. So 65 lakhs will be paid. So provision for unused paid vacations account debit to bank. And when you recognize a liability for 2.2 crores, it will be employee benefit expenses account debit to provision for leave encashment 2.2 crores. Okay, so this takes care of the question. Anybody has any doubt in this now? You spent quite some time on short-term employee benefits. Okay, yes, any doubts? No doubts? Okay, Yadu, thank you. All right, now I want some work from you. Okay, this part chota sa hai, nothing is there. Profit sharing and bonus plans, go through it for homework. Okay, this you go through it today only. Okay, present obligation, reliable estimate, whatever bonus is there, you will make a provision for that as employee benefits. Whatever your profit sharing plans are there, take a percentage on the profit, and that is going to be your payout to the employees or employee benefits. Okay, so go through this for homework today and solve this question also for homework. Kuch bhi nahi hai, absolutely nothing. Okay, next. Next, I want you to do this also as homework today. Okay. All right. So now these questions, if you solve, I am going to be relaxed. I am going to be relaxed. I will be doing post-employment benefits. Okay. Post-employment benefits. Now, what do you mean by post-employment benefits? Today, I will introduce you to the topic and discuss on defined contribution plans. And after the defined contribution plans, tomorrow we will be taking up the defined benefit plans. Okay. Defined contribution plans means what? Defined contribution plans means entity contributes to a fund. The fund pays the amount to the employee. The entity's obligation is limited to contributions in the fund. There is no need to contribute if fund assets are insufficient to pay all employee benefits. Actuarial risk and investment risk fall on the employee. Straightforward accounting, no assumptions, discounting or contributions. Okay. सर नहीं समझा, अच्छे से समझा, ठीक है. Provident fund, you people know. Are you aware of employee provident fund? Yes. Are you aware of employee provident fund? Yes or no? Are you aware of employees provident fund? Yes. Employee provident fund, what does it happen? The organization determines the person's salary. उस सैलरी का 12% they deposited with the provident fund authorities. They deposited with the provident fund authorities. Now, the employee also contributes, you also contribute, together you deposit in provident fund and that starts growing. That starts growing month on month. Okay. So now my question to you is, tomorrow when employee retires, who will pay the employee the dues that have been collected towards provident fund? Who will pay? Sir, the provident fund will pay. I am not going to pay. My obligation is limited to making contribution to the plan. I made contribution to the fund. So therefore, my responsibility is over in this regard. My responsibility is completed. Are we clear with this? Yes. Are we clear? Are we clear? Anybody has any doubts here? Yes. So my liability is restricted to 12%. Tomorrow at the time of retirement, employee will say, suppose, just assume that the employee fund that is their provident fund, that is worth, what we have to pay the employee is worth just, let us say 5 lakh rupees. Okay, is worth just 5 lakh rupees because most of the payments are not going through. Most of the, what you can say, your liability is restricted to 12%. Sorry. Just a minute. Okay. Defined contribution plans, you restrict your contribution there. When the employee retires, the balance in the fund will go to the employee depending on what the fund has generated the profit or what the fund has generated the increase in capital appreciation. The employee cannot come to the employer and ask, you have to give me at least these many returns. You have to give me at least the market returns. You have to help me beat the inflation. That is not what the employer can provide under a defined contribution plan, because his obligation is restricted to making contribution in the fund, which the employer has already fulfilled. So ultimately, suppose the inflation rate is 8% and the investment in provident fund has fetched only 4%. That means in effect, the employee's wealth has eroded in the provident fund. The employer cannot do anything. The employer will say, why are you asking me? My contribution I have fulfilled and the job is over. You are now going to the fund, the provident fund, to collect it. So the risk of investment falls directly on the employee. The risk of investment falls directly on the employee. That is what they mean by saying that investment risk falls on the employee. Investment risk falls on the employee. There is another risk that falls, which is known as actuarial risk. There is another risk that falls on the employee. Sir, what do you mean by actuarial risk? We will look at it when we do defined benefit plan. So contribution is limited. Benefit plan under which an entity is paid into a separate fund. All right. There is a straightforward accounting. Every month, what is the entry we pass? Every month we pass the entry. Employers provident fund contribution account debit. Payable to salary account debit, because that is ultimately going to reduce the payout to the employee. To PF payable, and PF payable account debit to bank. So ultimately, your contribution, employee's contribution, together you go and put it in the provident fund. All right. Anybody has any doubts so far? Any doubts? Any difficulties? Yes. Straightforward accounting. Nothing to be done. Nothing to be done. Okay. As compared to this, we have something known as a defined benefit plan. सोच संभल के सुनो अभी, just listen. An employee retires. We take the very first example that I started off today. The very first example I started off was what? At the end of the retirement period, the gratuity amount was 3.6 crores, right? In the very first example. Who is responsible to pay 3.6 crores? Who is responsible? Is any provident fund responsible, or is the employer responsible for 3.6 crores? What do you think? In the case of a gratuity, who is responsible? Employer is responsible, or some fund where you are parking the money, that fund is responsible? Come on, tell me. Who is responsible? The 3.6 crore that must be paid at the time of your retirement. Who is going to have that responsibility? It is whose liability? That's right, Mohammed. That is the employer's liability. So, the 3.6 crore is a defined amount. It is an underlying formula is there based on which you are calculating that. So that is why we call it defined benefit plan. Why we call it as benefit plan? Because under this case, you have to make a defined means 3.6 crore. That is the defined benefit. It is a benefit that is going to the employee. So defined benefit plan. In our example, we will have to make the 3.6 crore payment to you, the employee, at the time of retirement. And therefore, we are going to call these as defined benefit plans. Whereas defined contribution plan में क्या होता था? What would happen in defined contribution plan? In defined contribution plan, my job was to pay the contribution. बाद में the benefit out of that contribution, positive, negative, कुछ भी हो, I have to make the I will have to make the contribution and my job is done. That's it. Okay. So now coming to defined benefit plan. The entity's obligation is to provide agreed benefits. And because of this 3.6 crore dues which I am having, what would be my what can I say? What would be my nature of the risk that I am bearing? So, suppose I keep the money aside because I don't know how much amount is going to come at the time of retirement. So, therefore, if I keep the amount aside and that comes to an amount of 3.6 crore in our example, now suppose the amount set aside is 3 crores. The liability is 3.6 crores. Who is responsible for that shortfall? Sir, I am responsible as the employer for the shortfall. That means not only that, I am also responsible for the manner in which the investments perform. I am also responsible for the manner in which those investments perform. Because I put my money in certain investments. If they perform well, then that is good. If they do not perform well, the risk of non-performance, which was with the employee in the DCP, is now with me in the defined benefit plan. Are we clear with this? Yes, are we clear? Anybody has any doubts? Yes? Yes? Any doubts? Are we clear with the distinction? Defined contribution versus defined benefit plan. Clear? So now I want you to go through these questions as homework. Okay? This one question, go through it as homework for today. Yes, these two questions. This is for also homework, but this is not required today. You can do it later on. It is for you only. Okay? All right. These all what I am marking, you can read it later. Okay? They are pure theory. Okay? All right. That takes care of that. This also homework, state plans, insured benefits. Yes. Accounting for defined contribution plan, straightforward employee benefit expense or asset account debit, prepaid expense debit, to cash bank, to accrued liability. That's it. Nothing else. Okay. This is the regular entry that is passed. Yes. So take this as your homework. Take this as your homework. All right. So that takes care of DCP. Very simple. DCP, employee benefit expense account debit, prepaid expense account debit, to cash bank, to accrued liability. Okay, to accrued liability. Are we clear? Yes. Done? Yes. Can you go through this? Those large theory quantums, please do not go. But the illustrations and the initial part, what I have marked, please do that today. The theory sections you can read it later. I don't need it for our discussions. Okay, it is just for you to it is just for you to take you through the standard as a whole. Okay, so go through those questions which I told you. You should be in a position to do them. And tomorrow we shall start with defined benefit plans. Tomorrow's class will be a slightly longer one. So we should be in a position to complete defined benefit plans, accounting, and do lot of questions on that. That is a very key area for our discussions. Okay, so with that, we conclude today's session. See you guys tomorrow. Revise and come whatever we have done. Revise and come. Don't come just like that. Okay. Revise till defined contribution plans and do those sums, homework sums, which I have told you to do. Okay. And particularly that profit plan, bonus plan, and related questions that also you can do. Okay. With that, we close today's discussion. Thank you, everyone, and see you on Sunday, that is tomorrow. Okay. See you tomorrow. Yes. Yes.